is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
We've got over 3,000 daily flights at the moment, 500,000 people being moved around, and every flight is nearly full at this point in time, so you have to book early or you're going to miss out.
Okay, words of wisdom there. But where is the demand coming from?
Well, the likes of the sun destinations very strong, particularly on outbound UK. Dublin, we've got our largest ever schedule in and out of that this summer. Central and Eastern Europe is booking very well, and domestic Italy is particularly strong this year. So all across our network, we've seen huge demand. It's been robust. People very keen to get out and about and to get a bit of sun on their back this summer.
And they're willing to pay higher fares to do that. There had long been this idea that, okay, by this point, surely the pent-up demand story is over. Are you surprised that the consumer has been so resilient and is willing to pay more for those tickets?
Not particularly. I mean, we're coming off a very low base. Our average fare is significantly lower than everybody else's. Capacity in Europe this summer is still not back to pre-COVID levels. You're looking anywhere between 90-95% of pre-COVID levels, and I think it's going to be a few years before we get back to pre-COVID capacity. There's been a systemic change in capacity. Airlines have gone out of business or they've shrunk in size. There's more consolidation going on, like the likes of ITA being consolidated in Italy. The OEMs, the aircraft manufacturers are behind in delivering aircrafts to airlines. The leasing companies are short of capacity, so I think we're going to see this continue for some time, and in the meanwhile customers like yourself and everybody else are very keen to get out and about and keep traveling.
When does that run out, though? When do we finally see the end of that demand source?
Well, I don't think it is going to run out. I mean, if anything, I think people have decided after being locked up for a few years that when they looked at their priorities, that the travel is one of their key priorities, and indeed the ability now to work from home or to work from abroad has opened up the opportunity for people to be out even more than they were in the past. So this is just a wide
macro change. This is a complete regime shift in how people view travel.
Yeah, well, I mean, if you go back to the global financial crisis again, it was very clear at that point in time that your mortgage was your #1 priority. But after that, travel still wasn't sacrificed. People took the annual holiday. Now, the question mark is what happens into the winter. Will people, having had a great summer holiday, take a view that interest rates are rising, the cost of living is starting to bite, and at that stage, then maybe fares come down. But we don't know. We don't have the visibility at this point in time.
That was the Ryanair Chief Financial Officer, Neil Sarahan, speaking to our Danny Berger about the outlook for summer demand after the budget airlines' earnings actually beat this morning. Well, good morning. From Doha, we're here for the Qatar Economic Forum, which begins tomorrow. This, of course, is a three-day event, one of the flagship events. Powered by Bloomberg, it attracts business leaders and innovators from across the globe. Now, we'll also be hearing from government officials, including the Saudi finance minister and the Prime Minister of Hungary. Now, first thing is first, of course, we'll try and look at some of the dynamics where you look at global growth and where it's coming from, whether it's the Gulf or further afield. Today, equity markets care about one thing, and that one thing, of course, is the debt ceiling. We have some predictions from Goldman Sachs as well about when they think Treasury will run out of money. Now, equity markets are starting the week a bit hesitant, I guess. President Biden and Republican House Speaker Kevin McCarthy will meet a little bit later today to try and iron out some of the roadblocks in the debt ceiling negotiations. You can see European stocks pretty much flat. Talks really have whipsawed between progress and deadlock for days as time seems to be running out to reach a deal. But then we also understand from both sides that there's a real willingness to get through this. If you look at stocks, there certainly futures in the U.S. are seeing a little bit of pressure. And we have analyst notes, including UBS, saying, look, watch out for any kind of violent Treasury moves if this goes on for too much longer. The other top story, China has delivered the latest salvo in its escalating chip war with the U.S., announcing that Micron products have failed to pass a cybersecurity review. Now, Beijing has warned operators of key infrastructure against buying the American chips due to relatively serious cybersecurity risks. Meanwhile, at the end of the G7 summit, President Joe Biden said he expects ties with China to improve very shortly. So let's bring in Bloomberg's Mark Champion with the very latest on this. Mark, first of all, when you look at President Biden, he seems optimistic that they can get through this. Are there any signs that that's really the case?
Well, it's going to be tough. We've been here before. The last time they were really trying to stabilize the relationship, get it on a better footing. You remember there was the balloon incident. And here, President Biden was clearly explicitly saying that we want to get past that. He described it as silly. Despite the Chinese decision on Micron coming shortly before he spoke, he clearly chose not to respond directly, not to escalate, in a long-running war where the Chinese would see their action as tit-for-tat retaliatory in essence. And instead, he said, we think we can get past this. So, as you say, whether he can is another matter, whether the Chinese are in the mood, but he's clearly trying.
Mark, if there's, a war on chip makers, and of course, let's put this into context. What happened with Micron is significant because China is the biggest buyer of, semiconductors in the world. Can they get on sides in terms of foreign affairs, but also have this fight on semiconductors, or the two, do they go hand in hand?
That's the huge question. And you've had this debate recently between the European Union and the US, where they talk about, are we trying to de-risk our relationship with China, which is what the European Union talks about, or, are we decoupling from China, which has, until recently been more the US line. And, the question is whether you can de-risk, which is to say, we need to reduce our dependence on supply chains to China without decoupling. And a lot of that is going to be up to China and up to the kinds of responses that come, which we saw, after the balloon incident and so on. It is a really tough line to walk.
Yeah. And Mark, I guess, one of the things that they really want to try and achieve at the G7 was trying to get countries like Brazil, India, and Indonesia on side to condemn Russia of the invasion of Ukraine. Did they have any success in that?
Well, you'd have to say, fundamentally, no. Nobody changed their position. Zelensky essentially, with the help of the G7, ambushed those leaders. But, in diplomatic terms, he got in the room with leaders who've been trying to avoid being in the room with him. And he at least got to talk to some of them. And that actually counts. In diplomatic terms, you have to start. You have to make some kind of connection. And, he at least was able to do some of that.
Mark, as always, thank you so much. Mark Champion there, our senior writer, of course, on all things foreign affairs. Now, President Joe Biden and House Speaker Kevin McCarthy are set to hold a new round of talks on raising the debt ceiling later today. The fresh push to avert a U.S. default comes after the leaders' handpicked negotiators met for more than 2 hours on Sunday evening in McCarthy's office at the U.S. Capitol. So are we actually any closer to a deal? Let's get straight to Kevin Whitelaw. Kevin, the mood seems to have shifted, frankly, 3 times over. We're close to a deal, we're not close to a deal, now we could be reaching a deal. Where are we?
Yeah, the mood music is a little more positive all of a sudden. It had been pretty negative going into the weekend, but after a phone call between House Speaker McCarthy and President Biden, suddenly they both came out suggesting that maybe there was some room for an actual deal. Obviously, the Republicans are demanding very steep spending cuts spread out over sort of capped for a number of years, but they want to they want to allow an increase for defense. The Democrats are obviously in a very different place, saying that they don't, the country's sort of social safety net can't afford those kind of cuts.
So, Kevin, what are the chances that it still falls apart at this point?
Yeah, look, nothing is done until it's done with these things, but this is getting almost as close as it's ever come to what the Treasury has said is the day where the U.S. may not be able to pay its debts. That could be as early as June 1. That could slip until the 8th or 9th, but it's a super imprecise science at this point, and the risks are incredibly high. Both parties know it. And I think that the White House is counting on the Republicans to climb down a little bit at the last minute. But the Republicans have made a lot of promises to their own side and think that they've got a lot of leverage in this one.
So, Kevin, how firm is this June the 1st deadline? I think Goldman Sachs has said that, they'll have about $30 billion until June 8th and 9th, and $30 billion is really what they need to just function.
Yeah, I think there's odds are they may be able to squeak past the first, but they can't guarantee it. And that's obviously what's going to be having, the market's going to be watching it very closely. You're already seeing a lot of nervousness in the trading. And that's only going to sort of get worse as you get a little closer. Sometimes we've seen Congress and the White House get motivated when they start to see some serious market fluctuation. And so if that starts to get worse in the coming days, that could also have an impact on where this all stands.
Kevin, thank you so much, of course, for all of the insight on the debt ceiling. Kevin Whitelaw for us following the story. Now, coming up, we'll have plenty more from Doha. We're here at the Qatar Economic Forum. We'll also take a closer look at the state of U.S.-China relations as Beijing bans companies from buying Micron chips. We'll get back to that very shortly. This is Bloomberg.
We are each going to take, as countries, a distinct approach on China. But at core, when it comes to the core principles that unify us, there is a really underlying common approach. There are a set of very significant concerns, and we're going to de-risk ourselves. Our allies and partners are going to de-risk themselves with respect to them.
Well, that was Mike Pyle, the U.S. Deputy National Security Advisor for International Economic Affairs, speaking exclusively to Bloomberg about the G7's approach to China. Now, I'm delighted to be joined by Mark Haefele, the Chief Investment Officer of Global Wealth Management at UBS. Mark, good morning. I have 1,000,001 questions. I know we need to start about, talking about the debt ceiling, but also this U.S.-China spat. First, equities seem to be taking in their stride the fact that, there will be some kind of resolution on the debt ceiling. What if they're wrong?
Well, there's all different kinds of wrong, but I think that where you have to start really worrying is if we go beyond this point where the Treasury feels it can pay for everything, and then they start to prioritize the interest payments on the federal debt. And then, of course, that would probably lead to a market sell-off, which might sober up some of the politicians in Washington.
Mark, of course, this happens at a time where there's tightening credit conditions, where there are questions about what the Fed does and slowing economic growth. Are you optimistic about what markets can do towards the end of the year?
Well, I think we're cautious on the U.S. for a variety of reasons. As you said, the market kind of has been pricing in the good news that we've seen in the first half of the year and not really reacting too much to some of the bad news, including what's going on with the debt ceiling. Point out that tech stocks in the United States are trading 24 times forward or 30% above where perhaps they should be. So there is a lot of optimism built in at a time when, the credit conditions are tightening and, maybe the consumer doesn't quite have as much spending power into the back half of the year.
So how do you hedge, or do you hedge for any eventuality?
Well, I think that the most important thing for investors is looking at their cash holdings and looking at what they're doing on the bond side, because many of our clients, when there was negative interest rates, they weren't really looking in those areas. But I think first, because we think yields are peaking in the United States, it's a time maybe to move some cash into more attractive, longer-term bond holdings. And second, we would prefer going high-quality bonds, maybe some investment-grade bonds, over equities where we think there could be more volatility into the back half of the year.
Mm-hmm. And Mark, regionally, is this outside the U.S., or do you still see value in high-quality bonds in certain industries in the U.S.?
Yeah, I think the U.S. on the credit, the fixed income side, there's still absolutely alternatives. We would also look at emerging market bonds as well, where you get something of a yield pickup.
Mark, when you look at the U.S.-China spats, and this is a huge problem for semiconductors in the U.S., the China being the biggest market for semiconductors worldwide, does it change actually your risk appetite in certain parts of equities, or was this always going to be assumed, the case, especially in an election cycle in the U.S.?
Well, we've had many years now of kind of heightened U.S. and China tensions, and I don't think we or the market believes they're going to go away anytime soon. But, taking a step back, I think the most important thing for investors to think about is how, whether you call it de-risking or decoupling, essentially what we're talking about is making much more regional supply chains. And that means investing more money kind of to separate these two regions. And of course, at the end of the day, that is more inflationary and less deflationary. And so that has to factor into how investors think about a future. I don't think we're going back to negative interest rates anytime soon.
Are we going to be in interest rates lower, higher for much longer? The market is still pricing in cuts by the Fed at the end of the year. And then you have a lot of people on this program pushing back against that.
Well, I don't think that the Fed is going to be cutting rates at the end of the year. And if they are, it's probably because the economy has weakened dramatically. And so I think part of our concern about equity pricing, which you're highlighting, is that what the market seems to be pricing in is that the economy remains very strong, but inflation falls rapidly towards 2%, allowing central banks to cut rates. And of course, that's quite a trifecta to bet on into the back half of the year.
Mark, we're sitting here in Qatar, in Doha, because of the Qatar Economic Forum. And I know when you look at some of the emerging markets that Qatar, of course, trades with, you like emerging stocks that, benefit, I guess, from peaking U.S. rates, higher commodity prices, a weaker U.S. dollar, and also could benefit directly from China's recovery. Not every emerging market is created equal. Are there specific countries that look more attractive right now?
Well, I think the valuations in China make it attractive for us. Also, Thailand looks to be a real beneficiary of increased tourism from China. So I think some of our focus is more towards Asia. But, we do have a positive view on commodities and we have a positive view on oil. So certainly that the Middle East should benefit as well from that.
Mark, thank you so much for joining us today. That was Mark Haefele, Chief Investment Officer of Global Wealth Management at UBS. Now, we'll have plenty more, of course, from Doha. I'll be in Doha all week for the Qatar Economic Forum. We'll bring you conversation with heads of state and business leaders, including the chief executives of TikTok and Boeing. Also, tomorrow, conversation with the Saudi oil minister. Don't miss our coverage on television, online, and on the Bloomberg terminal. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar. Now let's get straight to the Bloomberg First Word News. Here's Alex Morgan. Hi, Alex.
Hi, Francine. Good morning. Well, we start in Greece, where Prime Minister Kyriakos Mitsotakis has pummeled the opposition in the national election held over the weekend. He's moved a step closer to another 4-year term. The Prime Minister's centre-right democracy gained almost 41% of the vote, as compared to around 20% for the leftist Syriza party of the former Premier Alexis Tsipras. Well, Mitsotakis will likely opt for a second ballot in about a month, rather than assembling a coalition. The Ukrainian President Volodymyr Zelensky has insisted that Ukraine is still in control of parts of Pacquement. It follows claims by the Russian mercenary group, the Wagner mercenaries, that Russia has taken full control of the eastern Ukrainian city. India's shorter bonds have rallied on bets that a withdrawal of the nation's highest value currency note would leave banks with surplus cash to invest. According to one estimate, as much as $12 billion may be added to India's financial system as authorities there remove 2,000 rupee notes from circulation. Well, consumers will have until the end of September to deposit the notes into bank accounts or exchange those for other denominations. And the Minneapolis Fed president has reportedly said he's open to skipping the rate hike at the Fed's next meeting in June. He told Dow Jones it would give officials more time to assess the effects of past rate hikes and the inflation outlook. But he also said he would object to any declaration that the Fed is done with those rate hikes. Well, that's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alex Morgan, and this is Bloomberg. Francine.
Thank you so much, Alex. Now, if you look at traders, they're a little bit on edge as negotiations restart on the debt limit, and of course, the deadline comes, sooner, closer and closer, if I find the right word. Equity markets starting the week a bit hesitant. President Biden and Republican House Speaker McCarthy are preparing to meet today in a bid to iron out some of the roadblocks. But again, a lot of these markets are actually on tenterhooks. European stocks gaining 0.1%. Coming up, the UK Prime Minister returns from the G7, facing yet another cabinet scandal. More criticism over immigration as well. Details next. President Biden and House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today as talks to avert a U.S. default resume. Beijing bars firms from buying Micron semiconductors, escalating the tech clash with Washington. Asian stocks rise after Biden says ties with Beijing are set to improve. Plus, Fed officials, including the chair, Jay Powell, signal a pause in the hiking cycle may be appropriate next month, while Christine Lagarde says the ECB's fight to tackle inflation is not over. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar. So the White House and Republican lawmakers have resumed negotiations on raising the debt ceiling and preventing an unprecedented default. President Biden was asked about previous rounds of talks with Republicans at the G7 meeting in Japan.
First, we weren't making progress. Then we made a lot of progress. And then all of a sudden, they came back with a proposal that was very cut back from where they had agreed. We are willing to cut spending as well as raise revenue so people start paying their fair share.
Well, President Biden also spoke about tensions with China. Beijing has delivered the latest salvo in an escalating semiconductor war with the U.S., announcing that Micron technology products have failed to actually pass a cybersecurity review in the country. Now, President Biden said at the end of the G7 summit in Japan that he expected ties with China to improve very shortly.
We're not looking to decouple from China. We're looking to de-risk and diversify our relationship with China. That means taking steps to diversify our supply chains, and we're not dependent on any one country for necessary product. It means resisting economic coercion together and countering harmful practices that hurt our workers. It means protecting a narrow set of advanced technologies critical for our national security. And those elements are all agreed on by the G7.
Well, President Biden speaking at the G7 there in Hiroshima. Now let's get on to the UK, and the Prime Minister, Rishi Sunak, of course, returns from the G7 summit in Japan, facing a cabinet scandal and Conservative Party finger-pointing over soaring migration numbers. Now let's speak to our UK correspondent, Lizzie Burden, who has all of the details. Lizzie, he comes back, and of course, it's about the Home Secretary. There are many issues that have really been front-page news of the newspapers over the weekend.
Yeah, Rishi Sunak really wanted to talk about better relations with the EU, what the UK is doing to help Ukraine, resetting relations with China. But instead, the first topic he was asked to talk about was, as you say, the Home Secretary, Suella Braverman, who the Sunday Times newspaper reported had a speeding ticket last year, and she asked her civil servant to help deal with it. Now, that's potentially a breach of the ministerial code. And you'll remember that Suella Braverman was fired from Liz Truss's cabinet last year because of a security breach. She forwarded sensitive government information via her personal email. So the attack from the opposition Labour leader today, Keir Starmer, has been, first of all, why did you reappoint Suella Braverman? Secondly, why haven't you sacked her yet? And thirdly, why haven't you launched an independent ethics probe against her?
Yeah, so what does that mean? Does he have to take a decision? For the moment, we understand that actually he still supports Suella Braverman. Does that change in the coming days? Well, she's going to be speaking in the House of Commons later today in Home
office questions. So potentially you could get developments there. But it comes at a difficult time, not just because of this personal issue around Suella Braverman and the speeding ticket, but in a much broader context, because last week Suella Braverman was criticising the Conservatives' policies on migration, and this week we're set to get new data showing that you've had a record surge in migration into the UK in 2022. Now, this is a huge issue for the Conservative Party. They've long promised to cut migration, and of course Brexit was touted as giving Britain freedom to control its borders to reduce migration. But what you've actually seen is that while the numbers from the EU have fallen, the numbers from outside the EU have risen, because you've had this post-pandemic surge of students, refugees coming from Ukraine and Hong Kong. And it's especially difficult for Rishi Sunak when he wants to focus on illegal migrants. It's one of his top 5 pledges to stop the boats coming from across the Channel. But if you try to reduce immigration as a whole, it dents growth. And he's got business leaders crying out for visas for the jobs that Brits just don't want to do, truck driving and fruit picking. Suella Braverman says she wants to see Brits doing those jobs. But if he banishes her to the back benches, she could prove a real thorn in his side.
Lizzie, meanwhile, UK home prices, or home asking prices, also rose at the fastest pace in a year. What does it tell us about the state of the UK economy?
Well, you make the correct distinction. It is asking prices, not sale prices. This is the latest report from Rightmove. They've climbed at the fastest pace in a year, and it does suggest that actually there's this confidence in the housing market because of the resilience we've seen in the UK economy, and you've seen mortgage rates stabilising, especially compared to those 14-year highs in the aftermath of the Liz Truss mini-budget. However, you still have economists warning that there's going to be a house price correction in the UK, and you've still got markets expecting more rate rises from the Bank of England. So what will be interesting to see is whether these asking prices convert into sale prices.
Lizzie, thank you so much. Our UK correspondent there, Lizzie Burden. Now let's get straight to the Bloomberg Business Flash. Here's Alex Morgan. Hi, Alex.
Hello, Francine. Good morning. 2 law companies are planning to merge to create one of the world's largest legal firms with $3.4 billion in revenue. Well, the combination of Allen & Overy and Sherman & Sterling will have almost 4,000 lawyers across 29 countries and offer US law, English law and local law capabilities. SpaceX has launched a 4-person crew towards the International Space Station. Its Falcon 9 rocket lifted off from Florida on Sunday evening. On board were 4 private astronauts, including the first woman from Saudi Arabia to travel to space. Well, the mission was operated by Axiom Space. It's the second of 4 human spaceflight launches that SpaceX is handling for that company. A committee appointed by India's top court says it doesn't see any regulatory failure or signs of price manipulation in the rise and fall of Adani Group stocks. With initial findings comes a relief for Adani's empire, which has lost over $100 billion since the Hindenburg controversy. Well, shares of Adani Group companies rallied Friday after the report was made public. That's global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Alex Morgan. This is Bloomberg. Francine.
Alex, thank you so much. Now turning to Wall Street, and the race is underway to replace James Gorman as Chief Executive Officer at Morgan Stanley after he revealed his plan to step down over the coming 12 months. Well, Bloomberg's Sue Keenan has more.
This is a trio of top execs at a top Wall Street bank, and so it will be widely watched who emerges as the one to succeed CEO James Gorman, who has expressed confidence about his succession plan, but did not announce any names when saying he would be stepping down. The key contenders are Ted Pick, who runs the Institutional Securities Group involved in trading and deal making, and he's also credited with revival of fixed income trading. Daniel Simkowitz, who oversees asset management with experience on both sides of the firm, and Andy Saperstein, whose operation manages money for the very wealthy, and that is a huge driver of growth. Now, Gorman took over at a time when the bank's business model was under fire, and it was struggling to recover from the financial crisis. In fact, he is seen as transforming the bank after it nearly collapsed, again taking over in 2010. Gorman now plans, as he said, to step down down as CEO within 12 months. He was previously at Merrill Lynch, and in his statement on Friday, he said, "It is the board and my expectations that the transition will occur at some point in the next 12 months. That is the current expectation," he said, in the absence of a major change in the external environment. Of course, that references that there could be a lot of volatility ahead that perhaps hastens the change. We shall see. Now, the real face-off is between Saperstein, a lot of analysts say, whose wealth unit was a driver of growth at Morgan Stanley, and Pick, who runs the riskier deal-making. Although Pick has had one rather public misstep, his group was caught wrong-footed back in 2021 when Bill Hwang's Archegos capital management collapsed.
Bloomberg, Sue Keenan there on the race to replace Morgan Stanley Chief Executive Officer James Gorman. Now, we're getting some breaking news out of the Wall Street Journal saying that Meta, the parent company of Facebook, has been fined $1.3 billion by EU regulators for data transfers. Now, this is something that we were expecting, maybe not that amount, but certainly we're expecting Meta to be handed a record European Union privacy fine, which would eclipse the €750 million penalty that they had issued to Amazon.com. Now, the regulator, which oversees the EU operations of most of Silicon Valley firms, could also order the social network to stop all data transfers to the US that rely on supposedly unsafe contractual clauses questioned by the bloc's top court. We don't know whether that is the case. Again, this is actually according to the Wall Street Journal. Meta has been fined some $1.3 billion by EU regulators. Of course, putting that into context, a data transfer ban has been widely expected, and that once prompted Meta to threaten a total withdrawal from the EU. So we're waiting also Meta, of course, response to this. Pre-market Meta platforms, of course, the parent company of Facebook and Instagram, down some 0.6%. The Irish decision we understand, but again, we're trying to really hit the phones to see whether we can also really fully quantify this. We understand that this decision could only target Facebook and not other platforms, and so it won't affect services as a whole, such as Instagram. We'll have plenty more, of course, on Meta. Coming up, also, the Greek bonds rallying this morning after the PM defeats the opposition. He's set to consolidate power only after a likely second-round election. We discuss that next, and this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar, for our Qatar Economic Forum. Now, we're just getting some breaking news out of EU regulators. Meta, we understand, has been fined a record amount of $1.3 billion by EU regulators for data transfers to the US. Now, this is according to the Wall Street Journal. The Dow Jones also reported the similar amount. Again, the ban is something that we had been expecting, or certainly the data transfer ban has been widely expected, and that had once prompted Meta to threaten a total withdrawal from the EU. I guess the amount is maybe a little bit bigger than expected. This is really a long-running saga over protection of data in the US, and the fact that they have been transferring, for example, some of the data collected here in the EU to the US. So the regulator is overseeing the EU operations of most Silicon Valley firms. We'll see how Meta responds to this, and of course what the next step in the saga is. Now, Greek bonds rallying this morning after the Prime Minister, Kyriakos Mitsotakis, seemed to secure another term. That's after he defeated the opposition by a historic margin in the country's election. However, he fell short of the threshold to form a government straight away, meaning that he'll likely opt for another vote in a month's time. Let's get straight to Paul Togwell, our Athens Deputy Bureau Chief, with the very latest. So, Paul, how much of this was a surprise? That actually the margin, so he doesn't have enough to rule completely, but he did better than expected.
Indeed, we expected him to come first, Mitsotakis and his centre-right Union Democracy Party, which he did. And we expected him to fall short of a majority, which he did. But we did not expect that he would win by such a big margin, the biggest winning margin since 1974. And just for some context, Mitsotakis placed first in all but one of Greece's 59 electoral districts. What does that mean? Well, later today, Mitsotakis will get a mandate from the Greek president to try to form a coalition government. If he fails, it goes to former Premier Alexis Tsipras, leader of Syriza. If he fails, it goes to the third biggest party. But yesterday, Mitsotakis said the result was so good for him that obviously gives him a mandate to rule on his own. And he wanted this whole mandate process to go as quickly as possible, showing that he wants to go sooner than later to a second election. That election, of course, will take place under a different system that gives the first party a bonus of as many as 50 seats, making it much easier to secure a majority. Tsipras also yesterday, after the results came in, said that the electoral cycle is not over, indicating that he too won't try to form a coalition, and that he knows that we're going to a second election as well.
So, Paul, when do we know what the next move from the Prime Minister is?
Well, as I said, he's going to see the president later today because it seems that this whole mandate process will go much more quickly than it usually does. Usually it takes as many as 9 days. We may have a date for a new election sometime this week, and the date that is seen possible is the 25th of June.
So how has the market reacted, Paul? Pretty positively?
Yeah, as you would expect, markets are showing the result. The yield on 10-year Greek government bonds is falling. Greek stocks are up. They surged as much as 6.7% in early trading. And also today, Moody's released a statement saying that the outcome of yesterday's election is credit positive. Why? Because it seems that optimism that Mitsotakis will be able to form a majority government after the second election means that we can expect a continuation of the fiscal and economic policies that he's been enacting, and that obviously is seen necessary to help Greece regain investment-grade status later this year, which obviously is important to help the country continue with its economic rebound and, of course, to continue to pay down its high debt to GDP ratio.
All right, Paul, as always, thank you so much for joining us. Paul Togwell, our Athens Deputy Bureau Chief, of course, on the election in Greece over the weekend. Now, the Italian Prime Minister, Giorgia Meloni, has visited flood-hit areas of northern Italy after cutting short her trip to Japan for the G7 summit. At least 14 people have died in the natural disaster and thousands have been evacuated. Now, the cost of the damage is estimated to be in the billions of euros. Let's go straight to Bloomberg's Alessandro Speciale, our Rome Bureau Chief. Alessandro, these floods have been a human tragedy. Economically, they're also damaging. So what's the expected impact?
It's still too early to assess exactly what's going to be the economic impact, but it's sure that it's going to be vast. Just this weekend, the sun started shining again. The flood-hit areas are starting to dry up, and it's possible to take stock. Emilia-Romagna, the region that was hit, as a high industrial, is a very industrialized area. Also, intensive farming, the crops have been damaged. An early assessment was 1.5 billion euros. And then, of course, there is the tourist season. Emilia-Romagna is on the Adriatic Sea, the Adriatic Riviera, and many of the areas there have also been hit. So the cabinet is going to meet tomorrow. There's going to be some tens of millions of euros of initial aid, but the cost of the reconstruction is likely going to be much higher.
Alessandro, Italy has avoided a Moody's downgrade. How much of a boost is this for Giorgia Meloni's government?
This is, in a way, a recognition of Giorgia Meloni's two things that Meloni has brought to Italy. On the one hand, it's an initial political stability, something Italy is not used to, but Meloni has a strong majority, as a relatively solid coalition behind her, and their approval ratings are still high, so you can expect more stability from this government than other governments in the past. And the other thing is that even if she is a right-wing populist, she has been displaying so far a remarkably conservative fiscal attitude. This means that financial markets have been taking a positive judgment of her. The spread between Italian and German debt is low and hasn't been rising so far. So even if Italy has problems spending billions of European aid, and this is the main test for Italy going forward, so far her economic stewardship has been recognized as positive.
Alessandro, thank you so much. Alessandro Speciale, there, our Rome bureau chief. Now, coming up, we'll have plenty more from this region. Saudi Arabia has shown it is willing to spend big sums to enhance its stature on the global stage. We'll take a closer look at how the kingdom is wielding its soft power. We'll also talk about energy and oil prices. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Doha, Qatar. Now, let's stay in the region. Saudi Arabia spending big to enhance its stature on the global stage. Now, it's not just splurging on sport, offering contracts worth hundreds of millions of dollars to tempt footballers like Ronaldo and Messi, but also art and music. But how far is the spending a plan to distract from the kingdom's human rights issue? Well, for more on all of this, let's bring in Bloomberg's Saudi Arabia reporter Sam Daher in Dubai. Sam, good morning. What's the motivation behind Saudi's big money plans?
Good morning, Francine. Great to be with you. I mean, it's actually a couple of things. I mean, obviously, there's the wow factor. They want to be able to say, look, we can bring Messi and Ronaldo. I mean, on Friday, we saw them host Bashar al-Assad and Vladimir Zelensky. And obviously, they also want to change the narrative, change the conversation. They don't want people to keep talking about the murder of Jamal Khashoggi and Saudi Arabia's human rights record, you know, the jailing of people for simple tweets, and obviously the brutal war in Yemen. They want people to talk about other things. I mean, we just had on Sunday the first Saudi women go off to space. And the third and most important thing they want out of this soft power strategy is to actually convince, you know, Western visitors and investors that this is a welcoming place. This is not a threatening place. Come here, invest your money, and even live in Saudi Arabia. I mean, they want to double like the population of Riyadh to like 15 million, and they've said we want foreigners to come. So to convince people that this is a completely different place, and also a big part of it has domestic motivations. MBS, the Crown Prince, the de facto ruler of the country, wants to energize the youth and engage them in what he's doing, his Vision 2030. 70% of the population is under the age of 35. And also, he sees this sector as a very important engine of job creation. I mean, they want all of this leisure, entertainment, tourism to account for almost 10% of GDP.
Thank you so much. Our Saudi Arabia reporter there, Sam Daher, in Dubai. You can read more, of course, on his piece as he tries to figure out whether this is working or not. Now, a reminder of our special coverage this week from the Qatar Economic Forum. Among some of the key conversations we'll be having are the heads of state, including Bangladesh Prime Minister and Rwanda President. So we'll also have plenty more with business leaders. Steve Schwartzman joins us, and then an important conversation on energy with the Saudi and the Qatar oil ministers. Now, the Facebook owner Meta was hit by a record 1.2 billion euro European Union privacy fine. It's also been given a deadline to stop shipping users' data to the US after regulators said it failed to protect personal information. So we'll have plenty more on that throughout the day. And this is Bloomberg.
This is Bloomberg Surveillance Early Edition with Anna Edwards and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Another round of talks. President Biden and House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today as time grows short to avert a U.S. default. China bars firms from buying Micron chips, escalating the tech clash with Washington. But Biden says ties with Beijing are set to improve. To pause or not pause, Christine Lagarde suggests the ECB isn't done hiking, while another voice at the Fed says he may back a pause. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta over in New York. And Kriti, still a focus on the debt ceiling. There were talks over the weekend, but nothing resolved just as yet. And time is getting shorter to get a deal that can get passed by lawmakers.
debt ceiling, a little hot and cold there with a side of geopolitics, and again, hot and cold when it comes to China relations too. It's having an interesting effect when it comes to the U.S. stock market, at least in futures trading, kind of unchanged at the moment, but you do see a bit earlier in the session into U.S. futures, and that's really interesting because we're talking about, again, all of these issues, the debt ceiling, the geopolitics, especially over the weekend. How does then that make fund flows actually attracted to the United States? That seems to be the question, at least earlier in the session. But look, a lot of the sentiment here is also going to be impacted by what you are seeing overnight, and not only in Europe, but in Asia as well. And that's going to be crucial. A major rally on our hands when it comes to those Asian equities. Perhaps that's going to influence some of the equity action stateside as well. But for now, 42.05 on those futures contracts. The bond market getting a little bit interesting. That's where you see the defense for safety, or the safety defense, whatever you want to call it, really show up. The two-year yield, 422 is what we'll call it, down by 4 basis points already. It tells you as soon as you start to see a little bit more action on the U.S. front, that bid might get even stronger. So really keep an eye on it. As we see the yield come down the front end of the curve, the dollar follows right now unchanged, but the direction of travel really tells you those interest rate differentials are seeming to drive the trade. And of course, NYMEX crude trading with a 71 handle. Not really much action there, but something we're going to keep an eye on as we watch for those bigger levels. Some breaking news, of course, hitting the Bloomberg terminal. Gautam Adani's flagship business jumping almost 19%, the highest level since February 2nd. You can see this massive, massive move. This, of course, coming off the headlines overnight that the India did not also really see that there was anything wrong. This coming after they investigated internally. One of the big kind of pieces of concerns, Anna, when it comes to the Adani Enterprises was just how close his relationship to Prime Minister Narendra Modi was, perhaps winning him some of those government contracts. For now, getting the all clear from India's regulatory authority, that pushing the shares to the highest since February, Anna.
Yeah, of course. This after we saw the stocks in that group really coming under pressure as a result of the short seller report that we've reported on previously. This is the picture then across European equity markets. Kriti, there is a push and pull around the geopolitics and the debt ceiling story as well, firmly in focus over in Washington. So with that in mind, most of these markets not going very far. The DAX and the CAC just under the flat line, but the FTSE 100 is up by around 0.3%. So we're quite mixed actually across these European equity markets. What is not mixed is the Greek market down there. You can see that area of green, flashing bright green, just up by shy of 7% today, as we see a lot of enthusiasm for the news that the incumbent over in Greece has done pretty well. We'll see the bond market reaction on that in just a moment. But one sector that's not doing well is around basic resources. We've seen iron ore prices under pressure, and that perhaps weighing on the basic resource prices. We had seen oil under pressure as well, but actually that just back towards the flat line on the Brent price at least. So we're down by 0.6% on basic resources. This is the Greek 10-year yield, and we're seeing substantial movement here, dropping by 15 basis points on the Greek 10-year yield. Actually, the gap between Greece and Germany decreasing, as you might expect. And Moody's talking about this as being credit positive, these developments in Greek politics. We'll get a further update because there are more votes to come. But the fact that the incumbent did pretty well does suggest that the market has given this the thumbs up. This is Ryanair's share price up by 2%. This is the low-cost airline. We'll play you more of our interview with the CFO over at this business. A positive outlook coming through from the company, that pleasing analysts it would seem. And NatWest Group up by 1.2% as it buys back a chunk of its own stock from the UK government. Remember, the UK government took a stake in what was RBS at the height of the financial crisis, 2008. It was the poster child for this part of the world for bailouts of banks. And since then, they've been trying to sell down that stake. It's now dropped today below 40%, but that effort is ongoing. Kriti.
Anna, our top stories today taking us from Japan to China and, of course, Greece. We are going around the world in just the next few minutes. We begin in Japan, where the United States debt drama loomed over a meeting of G7 leaders. President Biden answered a question for our very own Anne-Marie Hordern about the debt ceiling talks.
First, we weren't making progress. Then we made a lot of progress. And then all of a sudden, they came back with a proposal that was very cut back from where they had agreed. We are willing to cut spending as well as raise revenue so people start paying their fair share.
Joining us now from Tokyo is Bloomberg's Anne-Marie Hordern. She has been all over Japan covering the G7 summit. Anne-Marie, give us the update here on the debt story. Of course, looming large not only on Washington, but I got to say the international audience as well.
Yes, certainly. This was something that the president's peers and other world leaders were concerned about. They're concerned about what could be the next potential economic risk to their own economies, and it's emanating from Washington, D.C. But we're going to get a lot more news today because there could really be this pivotal meeting that's happening today if, we look back at some point on the negotiations. And that's because Speaker McCarthy will be sitting down with President Biden. Really is just going to be these two men that have to come to an agreement. And what you heard from the president before he was wheels up on Air Force One, where he also spoke to Speaker McCarthy, and then when he landed, he said that he thought the meeting went well. McCarthy also thought it was productive. So that sets up potentially some progress in the negotiations today, is that they do not agree really on two things. One is where the spending starts from in order to cap. And also, President Biden, you just heard him there, he says he still wants to see revenue raises, AKA increasing taxes. Speaker McCarthy has said to me in a television interview right here on Bloomberg that that is something he would not agree to. He said two things he will not agree to. One is passing a clean debt ceiling bill, and the other is raising taxes. So while these two men are going to get in a room and potentially we could see progress, they are nowhere near done in terms of where the White House and the GOP see potentially a final agreement.
Yeah, and this gets tricky, doesn't it? Because it doesn't leave many days to get the deal done in the room and then to convince those outside the room, Anne-Marie, of its merits. Moving on to other matters at the G7, of course, this was something of a distraction from the G7 agenda, but there was plenty discussed when it comes to Ukraine. Further pledges of support for Ukraine from the G7.
So, of course, you have the G7 itself, those 7 countries pledging more support for Ukraine. Obviously, the president really is leaning into helping President Zelensky. They're now going to be starting to train pilots on F-16s, which down the road means we potentially will see F-16s on Ukrainian land. But we should note this G7 really showed that there's so much more work the G7 needs to do in terms of their engagement with the global south and trying to get the global south on side. So the real key leaders here that Zelensky met with, and more importantly did not meet with, so he met with the leaders of India and Indonesia, but he did not meet with President Lula of Brazil. And even members of Lula's team said they thought potentially this was a trap. They were quite taken aback and surprised that Zelensky was here in person. And Lula even criticized President Biden and his rhetoric on Russia. So it's clear that there needs to be a lot more work from the White House and their allies in this engagement with the global south. Because not just is the global south important in terms of they need their support leaning in on how they view this crisis and not how, say, China views it and the China peace plan, but also the fact that this group really wants to start closing the loopholes on the Russian sanctions. And you have to do that with some of these emerging economies that trade with Russia. The issue is they haven't signed up for those sanctions. So I think this really showed where the work needs to be done for the White House and their allies.
Commodities certainly at the core of that story. Anne-Marie, you talk about the rhetoric coming out of Russia and China at the top of the agenda at the G7. Let's talk about the China side of the equation. Where's President Biden when it comes to U.S.-China relations?
So he was asked about this by another reporter and myself in the press briefing, and what he said is that very shortly we could essentially see some thawing of the relationship. He talked about the fact that what he called the silly spy balloon really was a deterrence and distraction of the work that he and Xi Jinping did in terms when they sat down at the G20 in Bali last year. So what we could potentially see is maybe some more meetings. And then I asked the president if he would be willing to ease some sanctions, particularly those that are on China's defense minister, because right now that individual is sanctioned by the U.S. government. And at the same time, the U.S. defense minister, defense secretary Lloyd Austin, is seeking a meeting with him and is seeking a meeting with him next month in Singapore. And the president said that's under discussion. So I think there's potentially a lot more dialogue we could potentially see out of Washington and Beijing. But we have to see first if the White House may end up easing some of those sanctions.
Bloomberg's Anne-Marie Hordern, we thank you as always, covering all things Washington from quite literally around the world. We thank you as always. And just as President Biden is considering easing those kind of defense measures against China, Micron becomes the latest target in the United States-China chip war. Beijing warned operators of key infrastructure against buying the American chips due to, quote, relatively serious cybersecurity risks. Joining us for more is Rebecca Chung-Wilkins, Bloomberg Asia government and politics reporter. Rebecca, walk us through what we know about China's ban on Micron chips.
Absolutely, rather exquisite timing on Beijing's part, following all of those developments as Anne-Marie rounded up. I mean, we don't have that many details so far, but really this is the conclusion of a month-long review, a cybersecurity review by China's cyberspace authority, and again saying that there are national security risks when it comes to Micron's products. Now, China hasn't provided any details around specifically which products are going to be banned beyond giving that warning of these risks. But typically, of course, Micron uses its equipment in consumer technology, so not technology that's associated with sensitive areas like artificial intelligence. We're talking more about mobile phones, for example. So not necessarily things that are associated with those very sensitive areas, and really being read by most analysts a sort of geopolitical move and somewhat tit for tat after these very sweeping curves that we've seen from the US on China's own access to strategic technology.
Yeah, and of course we remember what has been said and done around Huawei, of course, by the West as well. Rebecca, where is this going to take the US-China relationship?
Well, I think ultimately what we are starting to see is China and the US learning to disagree together. So even though China is pushing ahead with some of these responses, as we can read them, and pushing ahead with these sort of bans after US and its allies moved to limit its access to tech, still, you know, the rhetoric has been somewhat more muted. And if we couple that with comments from Biden that we expect to see a thaw in relations, with the fact that we, for example, may see Blinken going ahead with that visit that was cancelled as a result of the balloon, we are seeing more broadly that these very top-level discussions may be resuming. And of course, there were these positive comments that we had from Jake Sullivan, National Security Advisor, when he met with China's top diplomat too. So there are sort of some room potentially to be optimistic, and perhaps this desire both on the part of the US and China to more narrowly define the areas in which they're going to focus their strategic efforts and reduce the risk that deteriorating ties lead to some kind of accidental conflict.
Rebecca, thanks very much. Rebecca Jung-Wilkins joining us there in Hong Kong. Now to Greece, where Prime Minister Kyriakos Mitsotakis defeated the opposition in the national election held over the weekend, moving a step closer to another four-year term. Paul Tugwell, our Athens Deputy Bureau Chief, joins us now for more. And what happened here? Because I say the incumbent moves a step closer to another term, but it's not quite a done deal yet, Paul.
Exactly. Whilst we expected Prime Minister Kyriakos Mitsotakis and his centre-right New Democracy to come first, which he did, we didn't expect him to win an absolute majority, which he didn't. But the big surprise was how big a win he achieved. His percentage point lead over his nearest rival, former Premier Alexis Tsipras, was 20 percentage points. Mitsotakis' party placed first in all but one of Greece's 59 electoral districts. So the surprise was that his win was so big. Later today, Mitsotakis will get a mandate from the Greek president to try to form a coalition government. He has 3 days to do that. If he fails, it will go to Tsipras. If he fails, it goes to the leader of the third biggest party. Yesterday, after the results came in, and we all saw the surprise, Mitsotakis says that he has a clear mandate to rule on his own. So he wants this mandate process to go as quickly as possible so we can move to a second election as soon as possible. Even Tsipras said that the electoral process isn't over, so he's looking to a second election as well. What changes is that election will take place under a new electoral law that gives the first party a bonus of as many as 50 seats. And that would seen as helping Mitsotakis very much to secure a majority government after that election.
Paul, it's worth mentioning this has kind of been seen or interpreted by the markets as a positive reaction on top of Greece outperforming a lot of major European economies and economies around the world, not to mention their debt market becoming kind of a safe haven of sorts for a lot of credit investors under his leadership. What comes next here? What's the next move on the political front, and how are markets supposed to be thinking about that?
Well, markets have welcomed the result. The yield on Greek 10-year government bonds is falling. Stocks are rising. They surged as much as 6.7% in early trading. And basically, this is all around optimism that Mitsotakis, who is seen as a reformer, will be able, if he secures a majority, which is seen as highly likely in the second election, he will continue with the economic and fiscal policies that are seen as necessary for Greece to be able to regain investment grade later this year after 13 years. those policies would, of course, enable institutional investors, for example, who currently don't invest in countries that don't have an investment grade, to come to Greece, and that would help to boost the current economic rebound, which would also help Greece to carry on paying down its high debt to GDP ratio.
Paul, thanks very much. Paul Tugwell, our Athens Deputy Bureau Chief, thank you for joining us. And we've already seen from Moody's that comment that this result is credit positive, so perhaps that takes us a little step closer to that investment grade Paul was describing there. On to other matters, corporate news flow. We talked in the last hour of programming about Meta and about how it had suffered a fine at European level, with Meta saying it will appeal the EU ruling, including what it calls an unnecessary fine. As a reminder, Facebook owner Meta was hit by a record 1.2 billion euros or 1.3 billion. This is an EU privacy fine and given a deadline to stop shipping users' data to the United States after regulators said it failed to protect the personal information of European users from the prying eyes of American security services. So that's what this particular standoff is about. Meta says it will appeal. There is no immediate disruption, it says, to Facebook in Europe. So things at Facebook itself continue regardless. Now, coming up on the programme, we'll get back to the markets. Henrietta Pacquement joins us, Senior Portfolio Manager and Head of Global Fixed Income at Allspring Global Investments. We can talk about what we're seeing perhaps in European politics, but also what we're seeing crucially in Washington and the debt ceiling debate. Lindsay Newman joins us, Head of Geopolitical Thought Leadership at S&P Global. Perhaps the debt ceiling debate catching her eye, but also that US-China narrative and relations between the two. We will talk about that next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. Look, there's a lot of gloom and doom out there. You got the debt ceiling, about geopolitics, and of course the monetary policy trying to tackle inflation. All that should bode pretty negatively for sentiment, and it kind of is. This brings me to a chart for our radio audience. Stick with me. We're looking at the S&P 500 being most shorted since all the way back to 2007, before the global financial crisis. It really shows you kind of the, again, pessimism baked into the market. Is that going to change how people actually invest, though? Let's bring in a true expert. Simon White, Bloomberg macro strategist, joins us now. Simon, they're positioned short. Does that really hinder the S&P 500 as much as this chart suggests?
Well, as is so often the case in markets, things are not often what they first seem. So I think that chart is really an artifact of the change in regulations back in 2008, the Volcker rule. So Index R, basically banks used to create S&P futures and buy baskets of stocks against it. And after the Volcker rule, they couldn't do that. So they were commercials in the CFTC data you had there. And now hedge funds, who are classed as speculators, which is, as you had in the chart there, are now doing this. So I think you have to take that data with, with a pinch of salt. So I think there is certainly, people are underweight equities for sure, but I don't think there's an actual big short. If you want to see it in a different way, if you look at basically hedge fund returns versus the S&P, they're very slightly positive. So I think hedge funds are getting long. They're slightly long, but they're not yet super long. And I don't see we're going to have this big short that's going to be covered necessarily. OK, so you're sceptical of the big short and the covering that would be required then on that front. And you see a bit more FOMO, about fear of missing out to the upside. But I suppose there's a lot of volatility and potholes, I think is the word you use, that could come our way. Yeah, absolutely. So I think there's people that are underweight. I think there's definitely a bit of AI stuff going on that's fueling this. If you look at the top stocks in the S&P year to date, NVIDIA, Meta, Advanced Micro Solutions, semiconductor stuff, they're going to benefit from AI. It may be too premature, but still, nonetheless, that's what's happening. And I think that rather than shorts, it's the same ultimate effect. People are underweight, and they're going to be chasing a market higher. OK, Simon, thanks very much. Bloomberg Simon White with the latest on his thoughts on the markets. For more market analysis, check out the Markets Live blog. MLIV Go, the functions you use on the Bloomberg terminal. This is Bloomberg.
As we start to get the larger game changer aircraft, and beyond that the MAX 10 aircraft, which have got 21% more seats, that may put some downward pressure on fares into the 2030s. But What I can tell you is that Ryanair will always have the lowest fare of any airline out there because we've got the lowest cost base by some significant difference. It'll always be within people's price point to be able to get out and fly. But yeah, I mean, the days of the 999s are possibly behind us for some time.
That was Ryanair CFO speaking earlier to Bloomberg TV. The budget airline delivering an income beat with high demand and consumers willing to pay higher and higher prices. Yeah, really interesting to see that business on the back of EasyJet last week upgrading guidance. So certainly the aviation sector in good spirits as we approach the busy summer season. And many of those airlines that operate business class suggesting that leisure travellers are filling the front of the plane as well. When we come back, we'll talk about the markets. Henrietta Pacquement joins us, Senior Portfolio Manager and Head of Global Fixed Income at Allspring Global Investments. A lot to discuss as we monitor the debt ceiling conversations taking place in DC. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Another round of talks. President Biden and House Speaker Kevin McCarthy are due to discuss the debt ceiling in Washington today as time grows short to avert a U.S. default. China bars firms from buying Micron chips, escalating the tech clash with Washington, but Biden says ties with Beijing are set to improve. To pause or not to pause, Christine Lagarde suggests the ECB isn't done hiking, while another voice over at the Federal Reserve says he may back a pause. I'm Kriti Gupta in New York with Anna Edwards in London. Anna, so much to digest here, but it really does feel like those debt ceiling talks are going to be the market drivers.
Yeah, absolutely dominating thinking, I'm sure, and a big vacuum, really, where the facts are and where the future is on that story. And so the market really needs to establish those facts, hear them from the people involved, and then see whatever deal is done passed by lawmakers before global investors are sort of relieved on that front. Then there's the geopolitics between the US and China, which provides mixed signals this morning. All of that adds up to not much movement on the Stocks Europe 600, up by 0.1%. Kind of 50-50, the sectors moving higher and those moving lower. Geographically, we're pretty well dispersed as well. We have a mixed picture across the German and French markets, which have been under pressure for much of this morning. The Greek market doing really well on the back of that the Greek election, and we'll get to that bond market reaction then next, because we are seeing those yields falling. We're seeing the spread between the Greek yield and the German yield falling. The Greek yield was already below the 10-year Italian yield, and we see a continuation of that particular dynamic as this is a country that post this election moves towards another round of voting later this year, but is trying to claw back that investment grade, Kriti, as we've talked about a number of times on this programme. Basic resources is one sector that's under pressure today, down by 0.7%. That weighs a little bit on the London market, of course. And Ryanair is up by 1.9%. We heard just before the break a clip from the CFO talking about the era of very ultra-low fares being over, but those fares still, in his view, affordable to many. Interesting dynamics around the aviation sector. In terms of the numbers, they seem to have gone down well with investors. Kriti?
Yeah, Anna, if you had told someone perhaps 10 years ago that Greek debt would be one of the best investments you could have, I imagine they would not believe you. That theme of safety certainly kind of flowing into the United States as well. Futures might pretty much unchanged following that tone you're seeing in Europe at the moment. The mixed feelings between some sort of progress on the debt ceilings. Meanwhile, you are seeing the geopolitical situation between the U.S. and China, and arguably Europe caught somewhere in the middle, escalate, and that really yields a net zero change when it comes to futures. 42.03 on that particular contract. The two-year yield starting to see a bid into the front end of the curve, 4.23 on that yield. Again, when we're talking about that bid for safety, treasuries, ironically, are still the choice in the face of a potential debt default by the United States. And with that bid, you do see the dollar index kind of taking that lead in terms of direction, but on the surface, not much direction. Again, being pulled by some of the other currencies in both directions around the world. NYMEX crude will stay with that similar theme, unchanged at the moment, but a 71 handle. The theme you need to know, Anna, is that all things are pointing lower. That means that there is a little bit of cautious optimism. Well, I would say caution altogether, but optimism when you're looking at the bond market baked in. And I think that's going to be a key theme as we go into the trading session.
Let's talk markets then. Henrietta Pacquement joins us, Senior Portfolio Manager and Head of Global Fixed Income at Allspring Global Investments. Henrietta, very nice to see you this morning, this Monday in London. So cautious, we're still cautious. We thought perhaps we'd get something a little more concrete over the weekend in terms of a deal so that lawmakers have time to pass it. That's not the case. We're looking at tighter and tighter timescales. How do you navigate then bond markets around this?
Absolutely. I think we were expecting a little more than we had over the weekend, we saw the backup in yields towards the end of last week, and for me that was driven by a bit of optimism that a deal would get done. So I think the sort of wait and see mode that we're in this morning, not much going on the equity side or the bond side makes sense. We need to get a bit more colour from those negotiations.
And how do you play how do you play treasuries at this point? Because from what you were saying there, there's a sense that yields go higher if a deal gets done because of people coming out of the safe haven of bonds, but others argue the reverse could be true. So what is it that you're watching for in terms of the treasury market dynamics?
So we've seen probably more movement on the short end and certain maturities on the short end, really reflecting the negotiations on the debt ceiling. I think if you look at the longer end, yes, there's a debt ceiling negotiations, but there are also the growth prospects in the second half of this year that are coming into play, and we think that that is going to look a little more difficult as the year progresses. You've got a lot being thrown at the consumer. You've got a lot still the sort of fallout of what happened on the banking side that needs to play out a little bit in terms of credit conditions. And to be fair as well, if you look at the debt discussion, there may be a bit of fiscal tightening attached to it as well. So not all good for growth.
Henrietta, over the weekend, Kriti Gupta over at the IMF wrote a paper about the fact that the markets are overestimating just how much progress has been made on the inflation front, specifically when it comes to whether or not central banks are actually done with hiking policy. Talk to us a little bit about just how long this inflation kind of trajectory could persist if we don't eventually hit the recession. I think the markets are pricing in by the end of the year. How much of a possibility is it that the inflation story, the inflation dynamic that we're in right now continues for the next year, year and a half?
Well, I think you have to remember that sort of things take time to sort of filter through the system. In a way, inflation numbers took a while to get up over the course of last year, and now they are going to take a bit of time to come down. We have seen progress in certain areas. I'm thinking goods, I'm thinking food to an extent, but seeing more pressure on the services side, which particularly the Fed is looking to deal with at the moment. So. Yes, our stance is that central banks are probably going to need to see really some pretty strong deceleration in growth before they start cutting. Hence, the sort of cuts that are priced into the US curve at the end of this year are possibly a little optimistic. So we do think that it is going to drag on a little bit over the course of this year.
Henrietta, is there a way to play, bond volatility specifically? In the aftermath of the banking turmoil, it felt like bond volatility was the new norm. And then as we get closer to the unthinkable scenario of a U.S. debt default, it feels like bond volatility has kind of disappeared. Your thoughts?
I think what we're seeing now is that fixed income has got its place back into portfolios. You've got a bit of concern in terms of growth, which means that you might want to balance your equity allocation with some fixed income. We've come out of a period as well where some fixed income assets just weren't attractive given where they were. I'm thinking European assets, for instance. Now, if you look at investment grade on the European side, for instance, you're looking at over 4%. So I think that's what investors need to sort of take into account. There isn't necessarily going to be a perfect moment to add to the fixed income portfolio, but looking at it now, given the backup in yields that we have and the sort of concerns around growth, makes sense.
Let me ask you about where you see opportunities internationally, because, with yields behaving the way they are, you've made the point in your notes that the US is no longer the only source of yield. Maybe if you're worried about the debt ceiling, you want to focus elsewhere where you might see less volatility. Where is appealing to you?
Absolutely. You go back a few years, the only source of yield was the US. Now that has changed. We are seeing even US investors starting to look outside of the US in search of yield. They can even look at it in hedged in currency terms and get a bit of a pickup. I'm thinking European assets, for instance. And you don't necessarily need to go too far down the credit spectrum to pick up some of that yield.
Right, so not to Greece?
Not necessarily to Greece, so it's obviously had a good morning, and it's on the mend.
It's not as far down the credit spectrum as it was.
Exactly, and in theory it's on the way up. So yes, definitely European sovereigns. We're seeing a fair amount of interest in terms of European investment grade as well. Maybe a little more caution, or at least more of a wait and see attitude in sort of high yield, for instance.
Henrietta, thank you very much. Thanks for joining us. Henrietta Pacquement of Allspring Global Investments. Coming up, we'll talk geopolitics. Lindsay Newman, head of geopolitical thought leadership at S&P Global, joins the team. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an interview with Evercore Chairman Emeritus Ralph Schlosstein. That's at 10 a.m. New York time, 3 p.m. in London. This is Bloomberg.
We're not looking to decouple from China. We're looking to de-risk and diversify our relationship with China. That means taking steps to diversify our supply chains, and we're not dependent on any one country for necessary product. It means resisting economic coercion together and countering harmful practices that hurt our workers. It means protecting a narrow set of advanced technologies critical for our national security. And those elements are all agreed on by the G7.
That was President Biden speaking about US-China relations at the end of the G7 summit in Japan. Joining us now to discuss is Lindsay Newman, head of geopolitical thought leadership at S&P Global Market Intelligence. Lindsay, nice to have you with us this morning. So if you just think about how the G7 has responded around China, it seems clear that they were very much focused on Russia, and that's where a lot of the conversation and Zelensky's presence led them in that direction, of course. But on China, I mean, it almost sounded slightly more European than American, the G7 communique at the end, talking about how they wanted stable China ties. And as he said there, as we heard President Biden saying, not decoupling, but de-risking and diversifying. What did you make of the comments on China from the G7?
It's very clear. This was an incredibly busy weekend. The message was unity across the board for this group of 7. And there were communiques on a variety of topics. One of the new words, the new phrases that has entered the lexicon from this weekend, we saw just there from President Biden, is economic coercion. And they announced this launch of the coordination platform on economic coercion. We will see where that goes and what the focus is there. It's about economic security, economic resilience. It's about all countries. It did not, interestingly enough, that communique did not mention one country or the other. It was about combating and addressing economic vulnerabilities, whether it arises out of the pandemic, the lessons learned from Russia-Ukraine, the ongoing Russia-Ukraine conflict.
OK, so that was certainly part of things. Since then, and also as that was all unfolding in China, we've seen interesting dynamics in Japan, we've seen interesting dynamics between China and the United States. So on the one hand, we hear from President Biden saying a better relationship is coming. At that press conference, he was sort of suggesting that things would be thawing a little bit. And then you see China saying that they find that Micron is not a business they want their companies to do business with because of cyber concerns. I mean, how do you look at the China-US relationship then with those sort of competing crosswinds?
Absolutely. Pragmatism. Pragmatism is the way that we can be thinking about the U.S.-China relationship, and it was all over the G7 summit this weekend, which is to say they were very clear, the group of 7, that countries are going to act in their national interests while they're also cooperating across these mutual spheres around energy security, around infrastructure, around economic coercion and supply chains. The Japanese cabinet minister for public affairs said it best. He said, we live in an era in which we find ourselves, in which cooperation and division are inextricably intertwined. And that's the relationship that we see across the board in this geopolitical moment.
Well, Lindsay, the Micron story that Anna references is so interesting because just a couple of days ago, Japan offered $1.5 billion for Micron chips. Just days later, China saying this ban is going to be the future of that relationship. In the absence of this kind of only China economic investment, or in the fallout of the diversification from the United States, what countries stand to benefit?
What this is all reflective of is we're seeing this accelerating interconnection between the economic and security spheres. That countries across the board, the U.S., Europe, are pursuing economic levers, economic tools like tariffs, like sanctions, like entity lists, restrictions, license requirements, in order to pursue their national security, to pursue their national interests. So we're seeing this conversation around nearshoring and reshoring and ally shoring. So there are certain countries that are going to see the benefit of diversification, even as these relationships continue to evolve.
Can I ask you about, Lindsay, how do we interpret then? You've referenced this a little, but maybe you can explain it to me a little more. How do we interpret reference to economic coercion then at a time when, as you say, lots of countries express their foreign policy interests through economic policy, through sanctions and the like? So what does it mean when they talk about not wanting other parts of the world to use economic coercion at the same time as sanctioning those they don't agree with? Help me understand what economic coercion really means.
Well, as I said, it's a phrase that we're all getting up to speed on. It's something that's really entered the lexicon over the weekend alongside de-risking, alongside circumvention. These are some phrases that we're going to be unpacking in the coming weeks, how monumental this G7 summit really was. But they have laid out that there's going to be this coordinated platform. As we saw last year with this partnership on global infrastructure, now we're seeing this coordinated platform for the G7, really saying we're going to put a marker down, that we're going to be unified and we're going to look to address these shared challenges and bring in the global south. And we saw that with the invitations this weekend at the G7 summit.
Lindsay, we're going into the 2024 presidential cycle. How did the geopolitics of the next year and a half, if you will, kind of bleed into the international story there?
One of the topics that we have to be looking at has to be this ongoing support for Ukraine. The message of the G7 was very clear. The G7, the Group of Seven, Europe, the U.S. will be there for Ukraine as long as it takes. We saw this decision that started the weekend where the U.S. administration has had this rethink on the F-16 training. The intention here is really to put Ukraine in a position as this counteroffensive begins to take place over the next couple of weeks, to see Ukraine make certain gains in order to ideally find this just peace that we saw the G7 talking about. But we see back in the U.S. that there is plenty of conversation around ongoing support for Ukraine. What will that look like if we see changes in the 2024 election? The Russia-Ukraine war is certainly one lens through which we can understand the geopolitical developments and the U.S. election cycle.
OK, thanks very much, Lindsay. Thanks for joining us. Lindsay Newman of S&P Global Market Intelligence. Coming up, we'll talk about the banking sector. JP Morgan is set to host its first annual Investor Day since the banking turmoil. More on what is ahead for that bank next. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Kriti Gupta in New York. Now let's take a look at some of the events that lie ahead for us this week. Later today, we'll be hearing from the St. Louis Fed President Jim Bullard. Tomorrow, we get a slew of global PMI data. On Wednesday, it's the UK CPI print that will matter. We'll also get minutes from the Fed May meeting. On Thursday, US GDP and jobless claims will give more insight into the US economy. On Friday, April's PCE print is in focus, as well as durable goods data out of the United States. So, Kriti, plenty of data points to look ahead to this week.
Plenty on the macro front, plenty on the micro front too. Anna, some of the pre-market stories that we are watching this morning, well, they start off with one stock in particular, Meta, in the tech space. META is the ticker for our radio audience. Find a record $1.3 billion in the EU over U.S. data transfers. Shares are down about 1.2% in the pre-market. Let's put that into some context if we can. Equal to about 2.6 weeks worth of European revenue or 4 days of global sales. So certainly not an insignificant amount, certainly more than it was previously expected, which is why you are seeing the shares under some pressure. Another stock tilting to the downside, Micron, tumbling as China says chips are a security risk. Remember, just last week, they got $1.5 billion from Japan. So now starting to see a question of where that future investment is coming from, if not China. So something we're going to be keeping an eye on there. Shares down about 6% in the pre-market, trading at about 64.25. And lastly, we stick with the China story. Alibaba, those shares actually higher by about 1.7% when you're looking at the ADRs in the pre-market. The reorganization crowd credit, well, it's neutral for now. That according to the S&P. Some good news after Alibaba has, of course, been in some hot water, Anna, throughout, well, I want to say the last year and a half or so, as it talks about its reorganization, just how much control it's going to have over the Chinese consumer. Another story we're watching in the U.S. specifically is J.P. Morgan, as it hosts its Investor Day today, just after it purchased First Republic. Joining us now is Bloomberg's global finance correspondent, Sonali Basak. Sonali, before we get into the First Republic story, let's talk about the China story, because that seems to be dominating headlines. J.P. Morgan himself, Jamie Dimon of J.P. Morgan himself said that, look, they're starting to do business a little bit more and more. What's the take on China on Wall Street?
I think you have to differentiate some of the concerns about China with the larger geopolitical question when it comes to all global investors. Remember, J.P. Morgan and many U.S. banks, Citigroup, Goldman Sachs, have a significant presence in China. And you think back to last year when they were in Washington, the big consumer bank CEOs, and they were questioned about their presence in China and what they would do in the event of a Chinese invasion of Taiwan. Now, that was the most contentious I've seen, kind of an interaction. And what the executive said one by one is they would follow the rule of the U.S. government. But again, they have large businesses in China, and there's no plan really to step back in any meaningful way if you already have a business at scale.
Okay, so that's the China momentum or maybe change in direction for some who are playing in that space, Sonali. Let me ask you about things a little closer to home, though, and that's consolidation in the banking sector, because J.P. Morgan has clearly played its part here, but there'll be many questions about whether there's more of that to come.
Yeah, certainly. And if you think about it, the bankers are certainly, gearing up their notebooks and pencils and thinking about how they would get this done, talking to different banks. But if you look at it, J.P. Morgan's big investor day is today, and the spotlight will really be on two women, Marianne Lake and Jennifer Pipsack. These are two women who are very clearly in the line of succession and tasked with integrating First Republic. Now, this is a monster deal for a bank that is already the largest bank in America, and so making this deal work out for them will certainly be a capstone of their careers. There's certainly that deal alone that we'll be looking to today, as well as J.P. Morgan's acquisition ambitions beyond that. They're known to make a lot of tack-on acquisitions, Anna, and invest in a lot of innovative areas. But remember, one of them more recently has not worked out very well with the college planning site, Frank, which ended up in a lawsuit, and the SEC charging the founder of Frank with defrauding J.P. Morgan.
In our last minute or so here, as we're talking about acquisitions and expenses, talk to us about just what we might learn on the kind of guidance front.
Yeah, the expense front is probably one of the most important. As we know, they have this massive acquisition. So what does it mean in terms of, do they have to cut other places? We've seen Morgan Stanley step up and do another round of job cuts, for example. We know J.P. Morgan is going to play up the areas that they may want to grow in, that they may not be number one in. But what does that mean in terms of places that they're in a soft market in right now? Will they have to finally take the axe to certain parts of the business?
Sonali, thank you very much. Bloomberg, Sonali Basak with the latest there on J.P. Morgan. Of course, details around succession at Morgan Stanley very much dominating the end of last week. So no doubt on Wall Street, that'll get plenty of conversation as well. And Sonali continues to be across that story for us, of course. So we'll be focused on J.P. Morgan and that Investor Day taking place today. Lots of data to look ahead to throughout the week, of course, whether that's the global growth story with all that PMI data hitting tomorrow, inflation data out of the UK, minutes from the Fed, all of that hitting this week. Lots to talk about, as well as, of course, monitoring the latest from DC on the debt conversations. That is it for Early Edition. Surveillance is up ahead. This is Bloomberg.